The market absolutely ripped today. My SPY puts got obliterated. I have not realized the loss on them yet. We're going to talk about why I'm still in that position. And I just want to say, guys, even with a proven profitable strategy, which you guys see me trade here every single day, it doesn't matter. If we get good PPI, good CPI, good jobless claims, the market's going to say, screw the market bias, and we're going to break right through it and now potentially shift through structure. So I want to say, guys, before we get into this, all the trades I've taken this week that I've won or lost on, I'm happy with all of them. I would take this setup each and every single time. And even if I lost, I'm not going to be mad because we're sticking to the strategy and the strategy works. Now, in this case, usually when price is trading above the market bias, we look for accumulation within the market bias level for a bounce. When price is underneath the market bias, we look to short in these areas of potential sell-offs and take profits. So last time, this could have been a potential 4% to 7% take profit if you would have shorted inside of the market bias. We also know that if we're looking at market structure, that if we take most recent swing high and we take most recent swing low, we could take a Fibonacci retracement from that level. We could take a Fibonacci retracement from those levels. And we can see that market structure on the daily chart is actually still bearish. Now, in this case, I expected price, once we found a bottom and confirmed by making higher lows and therefore higher highs on this BX trender, we saw that money was coming into this push. And that's why we expected price to continue to push up into the market bias, hitting a high of $540. Now, my plan here was to enter short within this level with puts, which is exactly what we did, set a stop loss at higher highs, so basically $544, which has not been hit yet, so structure is not broken, and take profit somewhere down between 520, which is a 2-to-1 RVR, and down to about 515, which is a 3-to-1 RVR. This historically has a 64% win rate, and with that type of risk versus reward, it is a pattern I would take each and every single day. Now, I want to zoom out and look at the macro trend here. We talk about the market bias and how pulling back into that zone is usually a very good sign of bouncing. Well, on the weekly time frame, the much bigger time frame, it's an even better sign of a potential bounce. That's why we were saying that the chance to buy this dip down here at 510 was a good sign, but we were expecting one more rejection. And that will go out the window this week as long as tomorrow holds above this 530, as long as tomorrow holds above 550, because you can see that the BX trender on the weekly chart is now making a higher low. Every single time that we make a higher low, it is a confirmed sign after we bounce off market bias that the S&P 500 is going to go on a multi-month run. Last time was 10% in 77 days. The time before that was 10% in 77 days. And the time before that, guess what, guys, was 10% in 36 days. And now, does this mean that this has to happen just because it's happened in the past? Of course not. But am I going to take these setups when they happen? Am I going to go short when we hit this rejection area on the daily market bias? Of course I am. Am I going to flip long if we confirm that that was the bottom and this candle closes with a higher low? Of course I am. I am not attached to any stock. I am not attached to any direction. I am only attached to what my strategy is telling me to do. And if you guys want to learn that exact strategy completely free, all the courses, link in the description. And if you guys want to join my private community, trade everything that I'm trading in real time, get access to myself and our private community, you can join the academy and the private mentorship group. Link is down below. I'll see you guys next time.